Hey, Dan, Brad, what's going on?
Scott, thank you for the introduction. As always, Brad, pleasure to be joining you on this Wednesday. How's your audio?
Thank you.
All right. Well, ladies and gentlemen, thank you so much for your time. This is the Trade Ideas Q&A webinar. Brad and I, two of the C-suite executives, right, Brad? C-suite?
What?
I don't know. I was just thinking about, the term. I've heard C-suite. So I think we're uppity executives of the company, but we like to come down from our C-suite golden throne room and interact with our customers, the lifeblood of the company. That's you, ladies and gentlemen. And I love to hear from Scott that so many of you are subscribers, because we're going to dive into two components today of the presentation. Number one, it's going to be a learning experience for you. I want you guys to know some things. We're not about just selling our services. You guys already know we rock, but I want to explain some interesting fundamentals, how those fundamentals are being put to use in Trade Ideas. And then I'm going to be talking about some things that I really think will open your eyes in terms of the trade initiation and discovery concept as I do it. And you'll see just how common the theme that you're seeing. So without further ado, let's start. But before we get started, I do want to give you guys a warning. Today's presentation is more of an adult themed presentation. That's why it's called the South Park edition. If for some reason you have children who like to listen to our Q&A webinar, I would just suggest that today not be the webinar that you show your children. Right, Brad?
You know how many children we have watching our webinar, Dan? Probably not too many.
Probably not too many, but you've got the forewarning. So our next so lots of disclaimers. So we have the South Park edition Q&A. This disclaimer is just standard for you to understand. Brad and I are in no way, shape, registered investment advisors. Nothing here is registered investment advice. These are opinions solely of us. We came to our own conclusions about everything we do here and the things that we're sharing with you based on our own due diligence. We like what we do, but it may not be the right thing for you. But in no way, shape is there any kind of offer to solicit you to purchase any kind of security. I want to assure you know that. But you'll be seeing a lot of securities trading and information about it. Okay. Now, possibly one of the most important disclaimers, but you guys being subscribers, most likely, Brad, do not need it. Like to give this one out. And with today's webinar, we certainly need this kind of information, a safety disclaimer, so as you don't reach for your diamond-handed wallet quickly. If you are not a subscriber, you guys are, so not to worry. But just again, be careful with your desire to instantly subscribe or upgrade in the middle of Q&A presentations. It's the best we can say. So first of all, I want to point all of your eyes to the chat room, the chat area of the Q&A. I posted a link into this, which is from a Reddit deep dive or due diligence, DD, whatever you want to call it. And the concept here is really hive mind research. What I want you guys to understand is, number one, what quote unquote the little guy is finding out versus what traditional researchers tell us or tell you, just conceptually speaking. That's right, Mike. It could be one of my own diamonds. So let's begin. Quick summary of Trade Ideas. Thanks to your patronage and your subscriptions, we are one of the fastest growing fintech companies possibly in the world. Certainly have the best fintech, and we're made in the USA by US developers, and we're very proud of our success. We've been doing it since 2003. This is 2021, and that's 18 years now. So I'm very excited because we still have that startup feel. Brad and I feel like, again, we just started the other decade, Brad, the other decade.
Just the other decade, yes.
That's right.
At least it's not the other century. So
correct. We're not that old yet. Our software comes in two forms: downloadable software, Trade Ideas Pro, which is what I will be demonstrating. But should you want to use it on a Mac or just like a Chromebook or something, we also have a web-based version of our product. Okay, so let's begin the Q&A session. We're going to dive right into some basics but important things for you to know as it relates to the bigger picture of what I'm going to be showing you. Okay. What is naked shorting? Many people don't know. I'm going to read it out for you so you listen. Naked shorting is the illegal practice of short selling shares that have not been affirmatively determined to exist. Ordinarily, traders must borrow a stock or determine that it can be borrowed before they sell it short. So naked shorting refers to short pressure on a stock that may be larger than the tradable shares in the market. Despite being made illegal after the 2008-9 financial crisis, naked shorting continues to happen because of loopholes in rules and discrepancies between paper and electronic trading systems. So this is a great way to start, because if you don't know what we've been talking about here as it relates to GameStop and other things, and there's some repeat slides on this and critical information, because once again, I want you to be able to tell your grandkids that that handsome CEO from Trade Ideas kept on telling me about this stuff on GameStop, and I was wondering why he did it. And then when it went to 100,000, you'll know why. So see that kind of story that you're telling your grandkids. I'm into that. But before we get into the meat of it, and this, by the way, will help you understand the link in the chat, which all of you should read. Really, you should. Okay, so there's an illegal thing called naked shorting. That's bad, okay? What is not naked shorting? And for this, we have a celebrity reveal from Tyrell Biggums. So if Tyrell borrows your crack pipe, meaning that he actually took physical possession of it because he got the borrow. So if Tyrell borrows your crack pipe and sells it for $10, then later, he buys a replacement, identical replacement crack pipe for $4, and he can return your crack pipe back to you and get to keep the $6 difference. That's a crack pipe short sell. Now, this is a legal short sale because remember, Tyrell got the borrow. He didn't just invent a crack pipe that didn't exist and sell it, but that's the difference. Okay, and this is what's been going on with many, many stocks, but we're really going to dive into how it relates to GameStop, ANC, and some of the ways that I hopefully want you to profit. But again, naked short selling is selling stuff that doesn't even exist. You got to get the right borrow. Okay, what happened was here is that the hedge funds did not realize that their counterparty were gamers, people that spent hours and hours and hours going through systems to figure out the rules so that they can beat the system. And the gamers figured out that Citadel and all of these hedge funds were short naked, meaning that they kept on selling and selling and selling and selling. And what the research suggests here, ladies and gentlemen, is there's possibly 2 billion shares of GameStop that could be shorted illegally on a float that only has 50 million. You have to understand. You have to understand the importance of why I'm telling you this in this particular slide. I want you to be paying attention. Okay? Amazing, crazy things are about to take place. And of course, you guys know that while they're doing all of this research into what's going on, they're blaming the retail traders, people like you and I, people like these researchers on Reddit. We're doing all the research and figuring out what's actually going on and disclosing kind of a corrupt system. So this is why I personally am so stoked to be, number one, fortunate to have timed and be participating in the trade. And obviously, I'm not telling you to do it, but I'm just saying that this is what it means to me. okay? And I'm the CEO of Trade Ideas, so part of it is providing you a way with also finding this trade or a trade like it and being able to manage it effectively, okay? As I said before, they didn't know gamer culture. They didn't realize that the gamers would figure out that this whole thing right here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, this is all from 150 million. Just start counting. This is all most likely naked shorting. Their trade, it looks like what's happening is okay. So to know that and to understand that, I think you realize that this is a situation where I'm not saying this is the first time this has happened. I think this has happened many times before, but volume now controls the whole 50 million.
Venture to selling. These are buyers and they're holding on to it.
As you guys probably imagine, if the whole float is controlled, the 50 million is controlled by 5 institutions, each holding 10 million, okay? Then if it goes up a large percent, then, well, you know, you have such a big position, it's so hard not to take the money. But when you have millions upon millions of retail traders who are holding 1 to 10 shares, well then, you know, 10 shares, 10 times 200, Brad, that's only $2,000. These guys are interested in the 100,000 share game. And that's the beauty that we're all seeing unfold in real time, okay? All the down moves, and by the way, you're going to watch this number today. We're going to talk about relative volume, very critical to understand the flow. So these down moves that were happening here, you could tell that this was basically kind of phantom volume. Brad, what does relative volume mean? Tell me, sir.
Yeah, so relative volume is a great indicator, a great filter that we have that looks at the stock's current volume at this point in time, and it gives you a very simple ratio and lets you know what kind of volume is it doing compared to normal. So a value of 0.16, that's 16% of normal. A value of 2 is 2 times, so that'd be significant. This is significant too, just in a different way.
And I want everyone, there's a very important reason why I'm talking about this and how it relates to your financial future, Brad, is because they did bring it down from almost 500 to $40.
Which is still 10 times the breakout point, right?
Right. But they brought this down on relative. You've got more and more short, and they're still holding. But as we move into the next slide, you can see that we've got it. So I took this picture of some of the stuff that I was doing in my 401k so that you guys know I am involved in and am able to show you that you can do it yourself. You know, this is a real profit. I trade my 401k using Trade Ideas as my kind of self-automated man-machine car. I get my ideas from there, I set my risk levels, and I'm going to show you how I did some of the other things that I've done. But all these trades I'm in, and again, not everything is GameStop and AMC, obviously. I have other things, but notice the title of this slide. It's a very important title. It's not gonna by itself. You have to do it. I actually asked for self-directed 401k, and I just simply started managing my own money instead of giving it to other people. We talk about this all the time. As of March 15th, I pulled off about 12% from here. I'm like at 42 right now, but I was up 54%. And again, this isn't being done to show off. It's being done to show an example, meaning that I'm trying to be the type of person that creates technology for a type of person that can make this type of return. I want to be and am my own, you know, best user. It's sort of like Brad, the hair club for men, right? I'm also a customer.
Are you a customer?
I'm not of the hair club for men yet,
No.
but I am a customer of Trade Ideas. And once again, I send these returns to a relationship manager at Wells Fargo, and I got this response, and I'll read it for you because it talks a lot about why you're here and why you use Trade Ideas technology. So I showed him this, just sent it to him this in an email, so he can see. And this was his reply. Good morning, Dad. This is truly an impressive return, which requires a different level of risk. My investment approach cannot compete with these numbers as it is geared toward generating risk-adjusted returns over a longer period of time.
Risk-adjusted returns. I
I've
don't know what the
quite
definition
clients
is.
who let me manage their investment assets, but like you keep a part of it in a self-directed account to implement their own ideas. Have a wonderful weekend. And please tell Sherry I said hello. This is the standard financial jargon. What does it mean to have an investment approach that is geared toward generating risk-adjusted returns over a longer period of time? I think, you know what my risk-adjusted returns are? They're high, Brad.
They are high.
I don't want like some, whatever that word is, two words that shouldn't go together, risk-adjusted. Well, notice, sir, everyone is being slaughtered, so it's okay to walk away with just one leg. I think that's sort of a risk-adjusted return.
Well, I think what they do is they try to make you feel like 3% is a good return, right?
Exactly. And I'm trying to make you see that what we say at Trade Ideas is possible. Ultimately, right, you have to be the driver of the car. Trade Ideas by itself also will not just be sitting there and printing you money. You have to work with it, which is what I do, and what most users of Trade Ideas do. You move, we move. As the whole Reddit army got more powerful, we were quickly able to adjust by giving you a channel, for example, of Reddit material. Why is this relevant to this Q&A? I'll tell you very simply. It's relevant because when new things come into the market, we are sort of like the people that vet them for you also. Like we're listening, we're trying to make sure if it's BS or not BS, and if when it's serious, we quickly adjust our technology to meet the demand so that you didn't have to spend a lot of time searching for Wall Street bets stocks, or in the case before, SPACs. So I'm going to minimize the presentation because I'll be coming back to it. Okay.
Loud and clear.
Okay. So today I'm going to be talking about a couple of things. Remember, technology, this is where, Brad, technology and philosophy collide. Psychological method swing. Name is practice, which we have trained. And I have a simulator on here and on the actions that I'm holding right. I want to show you when people have seen, so people have seen the CCI, and I've been in it the whole time, CCIVs, because ultimately, you know,
very little cash.
So I'm doing that. I will explain why and show you the consistency of it all. Okay, information today. Brad invited to go to Deer Valley, and our buddy Mitchell explained to us the IPO game is great. You get shares at a very low price. They IPO. You can either hold some, you know, and see if it runs, or you can just sell and move on to the next IPO. So the IPO game facilitated Mitchell buying a really cool place in Deer Valley, and it always caught my eye. I was like, oh, okay, well, you know, little guys can't really get into the IPO game. So then SPACs come out, and I realized that SPACs are basically the current IPO game. It bypasses the traditional investment banks, and the risk is you don't exactly know exactly what's going on, but the price you could potentially get is much better as per my CCIV trade in Churchill Capital Corp, which is going to become Lucid Motors, a Tesla competitor. And again, from having been watching this stock after I got in and doing a little research, it seems like the Saudi royal family's in it. It seems relatively legit. But this run up from 11 to 63 was nothing short of just like out there, crazy town. But the reason I didn't get in is because I looked at Churchill Motors, and this is our single stock window. Can everyone see that lower right-hand corner?
Mm-hmm.
Okay. So at $23, I looked at Churchill, and obviously $23 got a $6 billion market cap. Okay. Times 3, 6 times 3 is 18. So right around 60, it's got an 18 billion market cap. 18 billion relatively seems like a lot of money, but when you look at Tesla, and Tesla being the only electronics play, Their market cap is 637 million. So I just said to myself, well, wow, you know, even at 10x 60, meaning like 18, add a zero to it, you get 180, you'd still be 1/5 or, you know, 1/4 of the size of a Tesla. And I just thought to myself, you just never know. Like, it'll gap up just like it gapped down. And so here, 62, I know it seemed like, wow, it happened so fast, but you could see it go to 100. It's the same thing that happened in this one, something that I am in. Marathon, I mean, 20, but we're talking about, look at here. Okay. Look at what, and this is, by the way, Brad, I love this picture of like, look at what the
Camera trying to hit you over the head.
It's trying to hit you over the head, and look at where this thing is right now. It's breaking out. Like, this is the goal. This is the attempt of what we're trying to do. And look at the possibility. We're talking from 2 to 50 in a year, 2 years. What kind of a risk-adjusted return is that, Brad?
I think that's less than a year, and pretty big. My math isn't that good.
Right, but this is what we're trying to show you guys, that this is possible. We do it. You can do it using our technology. And now I'm going to go into why this is so critical. I've said this before, but it bears repeating. Okay, so when I'm in these kinds of positions, especially in a GameStop, which can move plus or minus 50 points in any minute, I'm kind of focused here, and I'm looking at my 401k portfolio in a top list that I have off monitor right here. So I got that covered. So how can I really allocate time to idea generation? Well, what I do is I create a strategy, okay, called blank check. And we've done this before where I'm actually going to get it from the cloud, but I implement this strategy, and it has trading instructions, you know, when it enters, when it exits. But really, I don't really care so much about this because I'm not doing this as like a day trade per se sort of a thing, okay? I'm actually doing it kind of as a money-centric FYI, if this makes sense. So what I'm doing here is I'm trying to find, this is literally my objective of blank check, because that's the name, is a SPAC. I'm trying to find other CCIVs. Now, again, remember I said this was tricky, but look at the price I got here, 1053. Start noticing. Okay, I want you to notice as I scroll up. Do you see what it's presenting to me? This is sort of the SPAC of that, Brad. You have to know what to look for, which I do. Because again, I've done it with CCIV, and then the one that turned into Ride, which is pulled back, but again, it ran great when it was a SPAC. So here I have them, and notice BOWX. So
I mean, that is right where your eyes go to, right? When you're looking at that list of stocks.
So just so you know that I'm very serious about it. So this BOWX is BOX acquisition. I actually own it already in my 401k.
The warrant.
The warrants. So you can have the stock or you can have the warrants. And I have the warrants, and this is the stock. And it's totally unrelated. I mean, Brad, it's just that it came back into kind of its sweet spot. And once again, notice that we're giving you the play-by-play, right? You've got the swing exit on the daily. You've got the AI signal, or rather, you know, the strategy signal, B+. And so you have this full, so I'm now like aware, number one, this makes me feel good because I'm already in it. But now I'm just looking at some of these other ones and saying, well, you know, when capital frees up, these are some of the, so you kind of go like this and you set an alert for it. Take note. Here it is. I'll actually go. See, in these cases, right, you're philosophically not so deterministic to the penny. I mean, really, there's almost no difference between that and but for trading purposes, I want to keep it simple. Like somewhere here where, you know, really starts to pick up, because the name of the game is, while everyone's been suffering a gigantic pullback in Churchill, I'm sitting pretty because I'm long right here, and I actually think it's going to maintain this level. So what I wanted to show you was this beautiful transition from simulated idea generation where you see the trades, okay? And by the way, they will, since this is after hours, they're going to be there tomorrow in the morning. So when I come in, I'll see how they do, see if this continues, or so you're kind of working in this SPAC swing trading environment, okay? So that's what I wanted to show you about this, and now I want to show you how it connects to the general thesis. So CCIV, we noticed that I bought it, good price, really spiked up, pulled back hard, and is now kind of consolidating, okay? Everybody see that? GameStop went crazy, really, really high, pulled back hard, consolidating, and now is running up, pulled back, and is consolidating again. So I'm playing this play over and over again. Look at Kodak. Let me zip out of here. Do you see this? If you look at the bigger picture for Kodak, what you're seeing is gigantic spike on the news, gigantic pullback, and it's just oscillating, kind of creeping, making slightly higher highs here, here, but really almost like the flat line until what I expect will happen soon, which is a big explosion to the upside. Once again, very low volume on this move. No one's repositioned. So this is a play that I just keep doing. It's part of what I call my investment thesis, and one of the things where I do it is just being like on a slightly different time frame. If you want to trade it, and again, I like to get positioned into things, and then if they don't work, then I'll switch my money into something else, because I personally don't need to just be in and out all the time. I don't need the juice. I like a working portfolio. And there's nothing wrong with that. It just happens to be my approach. So, but when you're starting and when you're trying to figure out, well, how do you best allocate your mind to, which ideas? We talk about the AI. And I want to show you again that the AI is trying to get you in situations where hopefully it starts to run. And again, I'm going to remind you of Marathon here. Okay, so Marathon going from 10 to 50, 5x, 500%, had downs, swings, down. Like if you would have bought it on the second turn, again, that wave turn, you would have never seen this price again. And we love those types of situations. So Avanex is sort of going for that. You have to think in the bigger picture. Okay. Axonics. This is a big, long uptrend, and the software is looking at continuation. Again, we cannot know the future. We're just saying that this was its statistical play from today's AI. Okay. This one is a play that personally I love. I mean, Barry and I, we talk about this stuff a lot. This reminds me more of the mean reversion type of situation. And again, I have no idea on variance systems and why it went from 77 to 48, some terrible news, obviously, and continued lower. But you look for supply-demand imbalances. This looks like it could be one, and I totally get it. So this is where, again, I'm just going to create an alert here. Call it turnaround and set it. So now I'm ready. So this is a way that if I'm not trading every AI trade, at the end of the day, I can look in and set up my prices based on what it wants to do. Now, somebody correctly pointed out, Holly was all over the place. Okay. And that happened. I have to unwind this trade. Market is scared and a little discombobulated, but by the way, from the point of view when I look at it on a portfolio basis, it's totally working for me really well. Like, you don't have to panic that much when your portfolio is powered, let's say, by digital currency or a metal that's working, you know, or other things. So when you're not stuck in that Dow Jones Industrial S&P 500 mind frame, and again, there's nothing wrong with those indexes, but one of the ways you free yourself from it is kind of creating your own portfolio. And this is what I've done here. And this is kind of today's action of my 401k portfolio. You can kind of see what I have and how many. It's about 32 stocks, and I can sort them by like position and range over the last 20 days. So you can kind of get an idea of what's going on. But the beauty is this is where size comes into it. Like, I'm sized the most in US Steel, and it's on 20-day highs. I'm sized really nicely in these guys. So things are working out very, very, very well so far. And you can do it too. That's, again, what I'm trying to really reiterate. Cockpit, you know, I can look at my trades through the calendar view. This, obviously, this is Brad attached to my simulated trading. So I can take, again, a closer look. But very soon we're going to have this simulated trade, drill down details. We're focusing on giving you the information that will help derive value so that you can see where it is that you need to apply more kind of study or work. Yeah, Mira, I'm pretty sure you can do that easily. If you send an email to somebody, they can help you out. Unless Brad disapproves of that answer. Okay, Brad, where are we with the questions?
I think we're going to be caught up here after I answer Mira here.
Okay, so in summary, what we're talking about, keeping it simple. So something else that I want to make sure you guys all see right now, and this is something that we have that nobody else has, but I want you to see it so you know how important it is. This is my continuation of the takeaway for all of you. Let me hold on a second. Okay. All right. So notice I brought up US Steel, which is actually one of my positions. But on the daily chart, you can see that right now where it's at, it's telling you that if you got in with your preferred size, and let me tell you what that is. If you go to tools and go to options, AI trade size is your preferred size for this. So whatever it is, you know, I can say 500 shares, for example, just so you can, okay. So at 500 shares, this is my profit target gain and how much I would lose if it went past my smart stop. So every single stock, whoops. Every single stock you can look this information and drill into it and see what's going on. Because remember, we give you a smart stop level, assuming that you're going to get in. We don't know what it is. We don't know which stock, but knowing your preferred here, I just put in $500, and obviously a stock like NVIDIA trades a lot during the day. So at $500, you will potentially stand to gain or lose this much if you hold the levels. So once again, this is done for every single stock. 500. Man, nation. Okay. Here it is. Brad, is this feature available in the latest beta?
We'll be having a new beta released by the end of this week, and that beta will have that functionality that you're showing there, along with some additional enhancements to the calendar and the performance tab. So that'll be coming on.
Because it's after hours. I wonder.
I'm not sure.
Well,
If you duplicate that window, it'll do something different, but it may be because it's after hours.
I think it's happening. But at any rate, this is the difference between the trade ideas mindset for, and again, I'm just going to go through some stocks. Okay. Here you go. Oh, here, now they're coming in here. Why do you think, I don't know why that does that. Let me see. Microsoft. See, like it disappears on some, maybe because of this guy. Some of those bad prints. Sometimes Brad and I just talk to each other. But the idea is, here it is. If you were buying 500 shares right around here, and then this is your profit target or stop. So once again, everything has a plan for you. We don't know what stock you're going to be looking at, but we are going to help you figure out a way how to navigate it. Okay. Trading 500 shares of something like Tesla, by the way, if you didn't know the math, like off the top of your head, well, you might not have any expectations. Now you do. For the first time ever, mathematically, you have, this is your reward, this is your risk at 500 share levels. You can say to yourself, well, shit, I'm not going to trade Tesla like that. Brad, it's scary. I'm going back to 5,500. Okay. So at 5,500, you can handle that risk, can't you? And this teaches you a lot about, number one, your own risk levels and just yourself. You've just now learned something, again, that I think you will find very, very beneficial going. Okay, we're the only ones that do that. And we're trying to tell you how it really could be as big as we're saying. Those are the two real big themes of my presentation for today. Let me get back to present. We'll kind of wrap it up pretty quick. So as I said, we have channels. I didn't go through them because I wanted to show you what I was doing on the automated trading as an assist guide to actual trading side, but there's channels for just perusing everything, including a channel that sends you to our trading room moderated by Mr. Barry Anderson, our team member, and a wonderful trading moderator and trader. Helps everybody, nothing but fantastic feedback. And Barry's doing it also. He's showing you how to work the system through the simulated mode so that you can get comfortable. It's amazing that trading, something where you literally feel the loss instantly, is a business that everybody is dying to jump into without practicing at all. I mean, you know that doctors, for example, go and work on cadavers so they can learn how to do surgery. You know, how does it feel to cut through skin? What's it really like? And over practice on a cadaver, then they get comfortable and they move to an actual patient. Simulated trading is the same thing. There's a way to do it the right way. We're helping you that way by putting it all like as a business where you're auditing yourself through the performance tab, through the calendar tab. It's the best feedback you're ever going to have. And of course, the support with Barry's trading room being a big component of the experience. Wow. Brad, somebody put in a slide I didn't even know we had.
We have a new book.
We have a new book, guys.
Dave's been writing books instead of programming. What's up with
I'm
that?
gonna kick some ass, Brad. So Dave Mabe, wonderful buddy of ours, director of software development, wrote a free ebook. All of our ebooks are free, but my favorite strategy indicators. So Dave's actually a mathematician turned programmer, marathon, or not marathon, but very good runner and a director of our software development. Amazing guy, amazing team member. And check this out. I'm gonna have to, because again, this is the first time I've seen this slide. What separates us from all the other vendors, ladies and gentlemen, is our support. When you come into the Trade Ideas fold, you're inundated with a schedule where you can continue your education throughout your subscription experience. We have daily support session weekdays, 12 p.m. Eastern, 9 a.m. Pacific time. And all you have to do to sign up is go to trade-ideas.com/live. It is a game changer because, of course, all of these things allow you to interact on your own level, okay? We are a subscription-based service, and one of my favorite slides is here, where we tell everybody if you can't afford $2,200 for a year of premium trade ideas, then trading is not the correct career for you. You should, in trading, where you will lose money no matter what kind of system you have at some point, you have to be able to control those losses by knowing that those losses are not material to your livelihood. Because again, that's the foundational aspect of where you want to be trading from. You do not want to be trading scared money. It's just like poker, Brad. You know, a weak pot gets removed quickly. You just can't handle the pressure. So our premium service without any discounts for an entire year costs somewhere around $2,200. And if you can't handle that, please do not subscribe to Trade Ideas. Most of you already subscribed, so I'm just repeating what we normally say. This is a breakdown of how much our software costs on a day, just so that you know. And of course, for the holidays, we do have a promo code, Easter Bunny, 20% off your first month for a year off of Trade Ideas. But if any of these $7.50 a day price tags, Brad, if they scare you, you might be in the wrong career. We have a podcast and done by Sean McLaughlin and friends. Please check that out on your podcast search engine. And of course, while your CEO and now COO have both been, and wait, and Brad, how do you go through Today Trader? We're getting kicked off of social media so fast we can't even make up new accounts.
Oh yeah,
But
we have to adjust this, don't we?
Yeah. We still have two at Trade Ideas and at QuantBot. And of course, although I don't go there, we would love it if you liked us on Facebook or Instagram or TikTok or anywhere else where we may appear. And you can always reach us by email or telephone. So, thank you so much for your time. I hope you've earned something. Pay attention to that GameStop, and of course, keep working Trade Ideas. That's it, Scott.
Great. I think that's everything. So everyone can stay tuned for an email tomorrow from GoToWebinar with a link to where you can find the replay on the playlist if you want to see anything again or if you missed something. Thanks, Dan and Brad. Have a great one.
Bye, everybody.